It's Ashley, Keller Williams Real Estate Everett. Stay tuned for the 5 things you should not be doing when buying a home. Oh, hey everybody. It is Ashley with Keller Williams Real Estate. I am here with Tyler Beard, and we are going to be talking about the things you should not be doing when you are before shopping for a house and while you're shopping for a house. I mean, super duper important. Maybe Tyler, you could tell them a little bit about yourself real quick before you get started.
Yeah, thanks, Ashley. I am the branch manager here at Cross Country Mortgage in Everett, Washington. And you know what, we've been here at this location now a few years. And you know what, we have just a super big passion for helping homeowners and especially first-time home buyers get into their places. So I know a video like this is going to go miles, I think, for a lot of families, especially if they just pick up one tip that will keep them out of a lot of problems and a lot of troubles that we're going to talk about today.
Yeah, absolutely. And I think, like you said before we started this video, I think if people did these things, they would stay out of trouble through the entire closing process and everything would go very smoothly.
Yep,
so that's the idea. That's the idea. All right, so why don't we go ahead and start with number 1, which is opening new credit lines. Right?
Gosh,
tell us about it.
Gosh, this is classic, right? We go down and meet with the Smith family and they're sitting in front of us, they're getting pre-approved, right? And usually that process is 24 to 48 hours. In most cases, they bring in all their documents, they've done their application, and we get them approved. And what happens is they don't tell us that they just opened up 2 or 3 credit lines that didn't show up on their credit report. They are maybe shopping for a new car, right? And they just think it's okay, right? Oh, hey, you know what? I'm already qualified. Maybe they won't see it, or maybe honestly, they are just making a simple mistake, right? Out of sight, out of mind. It's just not really a big deal. It's like, oh yeah, we bought the couch that we're going to put in our apartment right now until we get into our new place. Well, that couch has a payment, so we have to calculate that payment into their overall qualifying numbers.
Yeah, exactly. And so it creates a little bit of an issue. And I think going hand in hand with that is getting your credit pulled a bunch of times. Like, we don't want that credit score taking a bunch of dings.
Yeah, it's what people don't realize is getting your credit pulled like once or twice. It's like going to see the doctor. It's like not a big deal. But if you start hanging out at the hospital for too long, you're going to get sick, right? With something that you didn't have before you walked in, just because you're hanging around a bunch of sickness, right? Think of your credit the same way. If your credit gets pulled a lot of times, it gets sick, and it will take it maybe 60, 90 days, 6 months to recover, depending on how many pulls. And especially those families that are maybe even car shopping. The car lots are classic. Like, try to go in and have your approval done before you go to the car lot. That way you're just showing up pretty much with a blank check, and they're not running your credit like 8 times. It is like super classic. If you even ask them, say, hey, look, I only want it ran once, they will send it 6 or 8 times because they're going to try to find the best deal for the car lot.
Oh, man.
And I've seen people's credits, drop 100, 200 points because they've gotten their credit pulled like 17 times. I mean, it's a tremendous amount that the car lots pull credit. So that's just one example, right? But what happens is, families maybe go take on a big expense. They forgot to say, hey, yeah, we really wanted a motor home, but they bought the motor home before they bought a house, and now it really throws their numbers off, right? Having an extra $500, $600, $700 liability that you have to make minimum payments on every month is a big deal.
Yeah, it sure is. And that takes us right into number 2, which is big purchases like cars, boats, motor homes, these things that have big monthly payments.
And more so right now than any other time over like the last decade, more families are buying boats, RVs, almost, I would say, all the toys, right?
Everybody, I thought about it. I'm all like, we should go get one of those.
you have all this expendable cash, and you just don't know what to do because you're actually kind of bored, right? Maybe you can't travel very far, and if you're up here in our area, there's like 20 minutes every direction, and you go drop it in. It sounds like it's pretty fun, so you go ahead and do that, and now you may not qualify for your home.
Exactly. So it's a problematic for sure. Yes. Number 3, changing jobs or quitting your job. Is this a big deal? I mean,
my gosh, we dealt with this in the last 30 days twice. on two separate transactions. The friend, they didn't even know each other, but it was just, maybe they were in those two cases, they just got a better job offer because employers are paying a ton of money to get people to switch jobs. And luckily in these cases, we still close the transactions. It just makes it more complicated and puts a little more stress on the family. Like if you could wait, get into your house, and whatever moves you want to do later, it doesn't matter because you're already in your home. Try not to do it during the process, or if you are, please make sure you have that communication done up front, because it is a really big thing right now. You're probably going to get solicited. You're probably going to get a really big bonus for switching jobs. And I get that, but we want to work with you to make the process as simple and easy as possible. Because without knowing, and we're caught off guard, and we order your verification, and maybe you may not realize that we order last minute verifications of employment to verify that you're still working there. And we get this letter back saying you have quit. And we're supposed to close on Friday, and you forgot to mention that you switched to a new job the prior Monday.
Yeah, it's terrible. I had early in my career, I had a client that quit their job like 2 days before closing or something. I was like, ugh.
Yeah, it is. And honestly,
terrible.
And here's why it's such a big deal. It's not the fact that you're switching jobs and we can't maybe qualify you. Sometimes when you're signing those employment letters and you're signing that commitment to go over to the new to that new employer, there are contingencies in place. And they might have to do like a drug test in 90 days in order to keep you there. Or, hey, you might be a temporary or at-will employee for the first 6 months. And you're not considered a permanent real employee. Those things are big. We have one right now that on there was a contingency, and you had to pass a background check and show that you're allowed to work inside the US. Now, that was a simple one, right? But we still have to wait 2 weeks until you clear the background check, and there's supposed to be no contingency. So those are things that people don't realize. When you sign those contracts, there's all this other verbiage that we're looking for that's saying, hey, is there any way that they could let you go? And there's a chance of you not being here for 3 years, because we're trying to show a 3-year continuation of you potentially being at this job.
Exactly.
Yeah. And so like in some of these jobs, so we have a lot of families right now moving employers, and these are temporary jobs for like 12 or 18 months or even 6 months. These are like, hey, you're on assignment with this company, but after that, they're letting you go. That would be, we can't potentially.
It'd be a flag. Can't do it.
Yeah, if you don't have a long history of that, ends up being very complicated, a complicated situation now for our family.
Yeah, terrible. All right, on to number 4. Co-signing for another person's loan. Is this a big deal? I mean,
oh my God,
someone needs a little help. Come on,
Ashley. This is like, oh gosh, this is so classic. I think people are inherently so good and so giving that
they are
giving up their credit, and they may not realize that their credit was trashed because they co-signed for their friend who was late 5 times on the car payment, and they co-signed on those loans. But a lot of times what happens is we're helping a family and they go co-sign on a loan for one of their kids because the kid doesn't have long enough history yet on their credit. And now we have to take that into consideration because that child or family member hasn't made 12 payments on their own. So we have to consider it. It's a really big, it comes up a lot, especially I think right now, again, people are making big purchases. It is a very, very common thing to happen.
Yeah. So how do you guys end up looking at that when someone co-signs? Does it just go on their against their DTI just as a normal debt?
So it goes toward their overall debt that we're considering. So then
you would do the entire amount.
Yeah, we look at the whole loan amount. What's that monthly payment? Right. Probably not even made a payment because sometimes there's no payments for 120 days.
Correct.
Right? Families are making payments for 4 months, and so we have to look at all of that. So then we have to get statements. We have to order verifications, and luckily there's a team here to do all that and order all that. But it takes a lot of time behind the scenes to get all of that done. It may take 2 or 3 days before we have all that back from the credit companies.
Yeah, so it adds another, it's just another complication. And I think in a way it kind of goes hand in hand with our next one, number 5, which is spending any money beyond your normal monthly expenses. I mean,
So
right?
yeah, I think, people make big purchases, or even sometimes it's maybe not a big purchase, but what they're doing is they're pre-buying for the future home. Like they haven't even been under contract yet, but they're buying couches. Because right now, if you like go get a couch, I don't know if you've done this lately, Ashley, it is a nightmare to go find a couch. And
Oh
like,
yeah, you got to order in advance.
I mean, it's 6, 12, 18 months in some
Oh,
cases. Families are putting money down and they're having to make some payments on it. But we have to look at all of that and we have to consider the payments.
yeah.
And so that's kind of part of that. Don't spend a lot of money right now. Don't sign on other credit. Just make your normal expenses. Keep paying your normal bills. Don't do anything out of the ordinary. If you
Yeah.
want to look at paying something down or pretty drastically, or paying something off, which is our next point, right?
Exactly.
Which is paying off a big item. So a lot of times families will have enough for their down payment, and then they have a car loan, let's say for 10 grand. Out of the blue, they go pay the 10 grand car loan off, and now they don't have money for down payment, right?
Yeah, or their closing costs or whatever
Yeah, right.
yeah.
You might need those extra funds to get the transaction done. And you might have thought, hey, well, I had 14,000 in the bank. That was enough for the down payment. Why
Right.
couldn't I use the extra 10? It's not, we're not here to tell families what they can and cannot do. But if you want to buy a house, you're going to have to jump through a few hoops. And we want to make that process as simple and easy for them.
Smooth.
And this is a big piece that always ends up getting brought up. Or it's like, hey, we're going to pay off some of this debt. And it's like, well, let's hold off. Let's get the loan done, pay it off. And what happens is when we go check their bank accounts before closing,
Yeah, there's no money in there.
it's gone, right? And then they don't have money for down payment, or they've overspent. And maybe there was something that we use for qualifying, which is reserves, which is extra money in the bank to
Right.
show underwriting that you are a strong client. So
Yes.
spending that extra money is actually more important for us to have. You have a little bit more debt, but to show more
you have the
money in the
cash.
bank. So if something were to
Yes.
go on after closing, you were to lose your job, you're able to make that monthly payment for the new mortgage.
Yeah, and I think that's a super important point there when you talk about having reserve funds and having some liquid cash, because I think people sometimes they cut it right off. They're like, I've got like exactly $20,000. And it's like, well, you probably need a little more than that. You need a little more.
Yeah, I agree.
Yeah.
With that.
Yeah.
Sometimes
It's
they
important.
have the extra funds in the bank, and then at least this will alleviate all the problems for them. They're not having to scramble last minute, try to get a gift, try to do a cash out refinance on the car that they
Oh my goodness.
just paid off, just so that they can have the extra money in the bank again.
Yeah. Oh my goodness. Well, I mean, I think, honestly, so those are our top things you shouldn't be doing. And to me, it's really about communication. So having that relationship with your loan officer and making sure that you're letting them know what your entire financial picture is and what you have coming up, because they're going to be able to, here's the thing. It sounded to me like you have solutions for a lot of things. And it just really comes down to your client letting you know, hey, this is what I have going on. What do we need to do? And then you can set them up in a way to make sure that everything goes nice and smooth the whole time. Because buying a house is very stressful. You don't need this extra.
It is. And I would say, a lot of times families here have a great experience when they work with us. But what most people don't realize, 85% of first-time home buyers have a horrible experience. And here's why. They just don't know a lot of these tips, or the mortgage professional they're working with or the bank they're working with hasn't told them that they can't do these things. So it ends up being an incredible bumpy process that they never want to go through again, right? It's like going and having a root canal. You do not want to have that done, right? But 85% of home buyers have a really, really hard time when they buy a house, because they feel it's bumpy, they're not being told everything. And we want to make sure everyone understands the next steps. So if you feel like you're going to co-sign for somebody, or you're going to pay off some debt, or you really need to spend some money, I think all you need to do is give us a call. You need to share with us what your goals are, what your plans are. Hey, what does the next 90 days look like as you're searching for a home? That way, there's no things that are going to catch us off guard in the end. And then we've already maybe pre-planned for it. So we've already adjusted the numbers and let underwriting know ahead of time. And that way there's no ifs, ands, or buts that you're going to get this home.
Exactly.
What we always do out of our office, Ashley, and you've worked with us several times,
Yes.
we like to be able to give some guarantees, right? To all parties involved. Like, look, this client's been through underwriting. Hey, we've done already all the pre-work. There's going to be very little to no surprises on this. So we can alleviate all these items that we just went through on this video. it will save them a tremendous amount of heartache, and they will have a great experience.
Yeah. Get all the stress and uncertainty out of there. Yep, absolutely. Well, awesome. Well, thank you so much for reviewing those with me. If people want to get in touch with you, what is the best way for them to contact you?
Hey, you know what? They could give me a call personally, which is 425-931-7050, or they can email my team and myself, which is just tylerbeardteam@tylerbeardteam.com. And we would love to meet with them, talk with them, and see if we can help them get pre-approved, or even just have a cup of coffee and just talk what those initial numbers will look like, even without an application.
Yeah, wonderful. Well, perfect. Well, thank you so much. I look forward to doing another video with you soon. We'll sign off here.
All right, talk to you later.